So NEXTDC is Australia's largest independent data centre operator or digital infrastructure. They've got around a dozen live data centres in Australia, 10 in the pipeline that are being built, and probably close to half a dozen they're looking at building. In terms of their first half result, it was in line with expectations and they reiterated guidance, so not really any surprises there, all tracking to plan, and the long-term outlook is incredibly bright. What was more interesting about NEXTDC's result really was the fact they delivered some double-digit revenue growth and some double-digit sales in megawatts or units sold. But from an EBITDA growth perspective, it was only around 3%, and that's really because they're investing substantially to build up the business for the next leg of growth. Just to give you some context, NEXTDC have signed a huge amount of deals with some very significant counterparties globally, the likes of Microsoft, and when you tally them up, there's probably a couple $100 million of revenue that is yet to start billing, which is all contracted and guaranteed. So NEXTDC are investing right now to deliver on some of those very significant deals over the next little while. They're also investing to deliver on international expansion, and all of these things collectively do create a lot of value, all going to plan. But it also does create a jittery investor base. Just for context, demand for data centers is probably at all-time highs. So the demand factor is definitely there, but it's also important to remember that these data centers can take many, many years and billions of dollars to build. So they're long lead items. So right now what you've got is NEXTDC in an investment phase. They're looking to acquire sites overseas, they're expanding domestically and overseas, and increasingly building larger and larger facilities. So success in this regard will create value, but it does come with short-term costs. If we step back and look at the fundamentals, NEXTDC looks reasonably valued on around 25 times EV to EBITDA, so cheaper than corporate transactions we've seen of late, and they should deliver some impressive growth on a 2 to 5 year view. But we do realise that the next couple of years that growth is going to be a lot more subdued for the reasons we said, basically as they're investing to grow the business for the next phase. So in the shorter term, investors could get rewarded with some big contract wins, and contract wins tend to be what moves the share price. So some sizable contract wins is really the key catalyst on the next 6 months for NEXTDC. But that aside, we just need to remember that NEXTDC is really most appropriate for investors prepared to take a long-term view in this quality digital infrastructure.